Hello and welcome to today's video. Today's video is going to be a quick look at what does the RSI, which is the relative strength indicator below 30 mean. A lot of people use RSI for trading purposes, but they don't use it correctly. So essentially we are going to take a look at two things. First thing, when RSI is below 30, what does it imply? And then how do you correctly use this RSI indicator when it is below 30 to take trades? A lot of people just trade based on the fact that RSI was below 13, is trying to go above 30, and so that is considered as a bullish signal. But that is not the correct way to trade, because if you take those trades, a lot of those trades will be losing trades, and it's not advisable. So we will take a look at the correct technique to use the RSI indicator, and especially the 30 levels, that when RSI is around 30 or going from below 30 to a value higher than 30, how do we actually trade that? Before we proceed, a quick look at the disclaimer, which states that any information that I am sharing with you in this video is only for entertainment purposes. This is not any kind of trading or investment advice. If you plan to trade or invest your money, then you should get in touch with a certified financial consultant who can guide you with the risks involved in trading and investing, and then accordingly you can take your decisions. Before we proceed, I just want to call out that I am taking trades on a regular basis, and every month the trades that I take on my own account, I publish them for free on the community tab of my YouTube channel. So you can go to the community tab and you can get my trades for free. I'm not charging any money at this time for this service, so you can take advantage of it. I'll quickly show you how you can access my trades on the community tab. In order to get my trades for free, you can just go to my channel, Serene Trading Strategy, and once you're on the channel homepage, then you can go to the community tab over here, and here you can see that all trades are listed. So till now I have posted 41 trades, and some of these will show in the open status, which means this is an active trade and I have still not closed this particular trade, whereas some trades you will see will be closed. So these are older trades which have been, these positions have been closed, and so we have multiple open and closed trades mentioned here on various symbols that I have taken. And also for the closed trades, what was the return, whether it was a profitable trade or a losing trade, what was the annualized return, how many days were there to expiry when I took the trade, and actually the trade was open for how many days, all those statistics are mentioned here. We also keep a track of the running loss or profit. So right now you can see this is a positive number, so there is a $4,052 profit till now. So if you want to follow my trades, you can follow this process, and hopefully you will find this helpful. So besides this, all that you have to do is actually subscribe to my channel and enable the notifications. So how that is going to be helpful is that as soon as I post a trade, a notification will automatically be sent to you, and so you can receive that notification and accordingly you can view the trade immediately. Otherwise, if you wait, if you don't subscribe or don't enable the notifications, in that case, there may be some delay, or you may have to frequently go and see if some new trades have been posted. But if you subscribe to the channel and enable the notifications, you will get these notifications automatically every time a trade is posted on the community tab. Now let's get started with the actual video. So RSI is a relative strength indicator, and this particular indicator, it has a value between 0 and 100. Any values towards the zero side, that means anything less than 40 or especially less than 30, is considered to be oversold condition. What that means is that there has been a lot of recent selling in the stocks, and when the value of RSI is above 70, that implies an overbought condition, which means there has been a lot of buying in the stock. So usually RSI will stay between 40 and 60 values for most of the time, which indicates neither an oversold nor an overbought condition, but a neutral condition where some buying is also happening, some selling is also happening. But in those cases where there is aggressive selling or aggressive buying, the RSI will reach extreme levels of 30 and 70. So in this video, we are more focused towards the oversold position, and that happens when RSI is actually below the 30 level, and that will happen when there is a lot of aggressive selling. Well, what I mean by aggressive selling is it's not just that there is selling, but there's a huge amount of selling within a short span of time, and then the RSI will be going below 30. So in order to understand how to trade when RSI is under 30, let's understand why this RSI going under 30 is significant first. So what you need to understand is that stock prices do not go up or go up or down in a straight line. So stock prices go up, and the pattern will be something like this. So if you look at this particular chart, the stock price was going up, but then there was a small correction. That means the prices went down. Then again it went up. There is a correction. There is an accumulation for some time. It goes up, comes down, goes up, comes down, goes up, comes down. So in the long run, if you see, the stock price is going up. So if you look at any index, and if you look at most of the successful companies which have not been doing really badly or have gone to bankruptcy, you will see the same trend. Some companies will be more volatile, some stocks will be less volatile, so that's a different issue. But more or less you will see the same concept, that stock prices don't go up in an exactly a straight line. There are uh, some weeks when the stock price is going up and then it comes down. Sometimes this downward movement is so aggressive that the RSI will go below 30, and this aggressive movement can be used to create a trade. Why? Because when the stock price goes very aggressively to the downside, then usually what will happen is that it is driven by sentiments. It is more than the fundamentals or the news or the macroeconomic conditions. It is driven by the consumer sentiment. So what is going to happen is, let's say there is a negative news about a certain company, and the stock price should have fallen by 10% or 15% because of the actual fundamental change in the company, or because of the negative news which is around the company. But because the market will panic, because everybody will feel that the stock is going to zero, there will be lot of selling pressure created within a very short span of time, which may force the price down. Instead of the actual value, which should have been like a reduction by 15%, the stock price may fall by as much as 30, 40, 50%. And this is because of panic and huge negative sentiment, and the scare or the fear in the market which is created. So market is very, very sentimental, and it can push the prices much lower than it should have pushed. So those cases are the places where trading opportunities are created. So let's go to the Finviz screener itself. I will pull the stocks which today are trading at an RSI below 30, and we'll look at those examples to understand what I exactly mean, and then we'll finally see how do you actually trade those particular cases. So this is the Finviz platform. For those of you who are not familiar with this platform, I'll leave a link in the description. They have a free version as well as a paid version, but you don't have to worry about the paid version right now, because whatever functionality we are going to use is available for free. So once you're in this platform, finviz.com, you basically go to the screener tab over here, and then I have this all tab, so all filters will be displayed over here. And then RSI, since we are concerned with RSI here, so I'll select RSI and I'll select oversold at 30 levels. So what the screener is going to do right now, it's going to show me all the stocks which have RSI values below 30, and you'll see that a huge number of stocks is coming up. But I tend to put some additional filters. So let's say we don't want to look at very, very small market cap companies. We want to look at companies which at least have some sizable market capitalization. So now you can see we have 38 stocks. So let's say right now I'm not putting any other filters over here. So I can go to the charts and I can view multiple charts on one screen. And so what is the common trend that you see here? The common trend you will see here is that there is a recent fall in the prices, and the fall is pretty aggressive. Look at the recent price action on all these charts. The price has fallen very, very steeply. So I'll show you more examples, and you can see everywhere that there is a steep fall in price in the recent time. This is what I said when I was explaining the definition of RSI. I don't want to get into formulas and all that technical stuff, because my objective is to give you information which is practical and can be used for trading purposes, not information which is bookish and which just sounds good, but you can't really use it in a practical way. So in all these cases, the price has fallen very aggressively, and this causes the RSI to go below 30. So that's the first concept. And let me go to one more screen. I'll show you more examples so that you can understand that this will be the case with almost all the examples, because that's the very definition of RSI. So you can look at the recent price action in all these stocks, and you will see that recently the price has fallen by a huge amount. Now, once we know that RSI is below 30, what we understand is that the stock is oversold, right? The mistake people make is that as soon as RSI starts coming above 30, back 30, let's say RSI went down to 27 and then it starts coming up to 30, they basically get into a buy position. So they start buying stocks thinking that the RSI is now recovering. So this is the time to pull the trigger for a bullish trade. But that is where things are wrong. Because if you see here, look at this particular downtrend, right? So I'll take this example. So price started from here and it went down here. Around this point, the RSI would have already gone to a value which is below 30. So what is the reason? Why do you think the price cannot fall any further? We have no reason to believe that file price cannot fall any further, right? So unless I have a reason to believe, I have a logical justification to confirm that, okay, although the price has fallen steeply, but I do have some grounds to believe that the price will now recover. I cannot create a bull trade. I cannot get bullish on that stock. So the way you have to use these, or at least the way I tend to use this particular signal, is that I go to the weekly charts, and weekly condenses the data so you get to see a bigger time frame, which is really helpful, because on a weekly time frame you will be able to see the very significant support levels. So first thing is, do not trade only based on RSI going below 30 and then recovering above 30. That is not a buy signal. What needs to be done is, for example, if I again take this example GTHX, I would not initiate a trade unless the price reaches close to this accumulation level. So if you see in the past, when the price fell, it's the drop stopped at around $5 levels, right? So this $5 level is a very strong support. It's on a weekly chart. There was a lot of accumulation here, and in the last 2 years or so, the price has not gone below this level. So as far as I am concerned, this is a strong support level. So if the price is hanging here, now this is a complete downtrend, right? What is the guarantee if somebody says, RSI is trying to go above 30, so I'll buy at $6? That may end up losing money, because the price can go all the way down to 5. At 5, yes, I have much more certainty that price can get the fall can get arrested, because this is a strong support level, right? So look at LYEL. The price fell down, it kept coming down, and then it got arrested at this level. Next time when the price falls, it again keeps falling, you can see here, and it got arrested at almost the same level. Why? Because the previous low forms a very strong support. It forms a signal to the market that last time when there was a massive drop in the stock price, the overall market consensus was that around $4 was the low. So this time also, the markets are going to feel that the low of the previous time is a very strong support. So unless you see these supports, you should not be taking any bullish trades. So for example, in this stock, if you see FNKO, I would not trigger any trade. Why? Because I have no reference on the left hand side to see what was an earlier support. So this is right now, it's taken a massive fall from $20 to about 928, but there is nothing to tell me that just because RSI started recovering, this thing cannot go further down to $2 or $3. So PBR again, this thing I will be comfortable taking the trade here. Why? Because this level is close to these support levels. And also look at the last candle. This is a hammer. This is not exactly a hammer, but similar to a hammer with a long bottom, which represents that in a downtrend there was support to the upside. So the downtrend may be ending here. So this is one very important concept which you should always remember, that when you're trading based on RSI, a simple movement of the RSI value from a value below 30 to a value higher than 30 is not a buy signal. You need to correlate that along with support levels. If you see that happening at or close to a support level, then it forms a much more stronger bullish trade. Otherwise, it doesn't. Now, would I take these trades as it is? No. The answer is again no, because I like to create multiple layers of protection or cushion for myself. And so in this case, let's say I was trying to create a trade on PBR, and it meets my criteria, right? RSI starts going above 30, and I see a long tail at the bottom which indicates some buying pressure, and this is around the support level, which is a strong support level from the previous lows. So all conditions are met, but still, instead of buying shares at this 10-14 price level, I would prefer to go and sell maybe the 8 puts. So I still get to collect the premium, but I'm creating another $2 of cushion that the price can fall further down to $8 and I would still not be incurring any losses. Rather, I would be collecting the premium, which will be my net gains in this case. So that is the right way to use RSI. So rule one, we are not just depending on RSI, we are correlating RSI information along with the support levels. And there also we are not buying at the support level price. We are going 5 to 10% below the support level price and they're selling the puts. So this way, if you trade, then this saying which is there that in trading you should never try to catch a falling knife, chances are that you will mostly not catch the falling knife. It is impossible to time the bottoms, exactly know when a particular stock is going to bottom out and it's going to start pivoting and going up again. But with this technique, you have a lot of things in your favor. You have the RSI telling you that the trend is reversing. You have the support levels telling you that this is a strong support, so trends can reverse. And again, you are using options to trade the stock at a much lower price, creating another level of cushion. So this is what we just saw on the Finviz platform itself. The first point, that don't trade with RSI in isolation. You need to correlate this with other data. What is the other data is the second point, that you need to trade RSI along with matching it with the support levels. If the RSI is gone, it's gone below 30, but it's trying to move back towards 30, or it's trying to go above 30, and this is happening at an existing strong support level, then that forms a much more bullish signal than simply the RSI going up without any support levels confirming that. And the third thing was that in order to create further cushion, you can sell the put options which are 5 to 10% below the bottom which has just been created where the RSI reversal happened. So in case the price falls further, you still have a 5 to 10% protection, and the option premium itself will create another level of cushion. So if you keep all these points into mind, you can understand how to trade the RSI in the right manner, which will give you profitable trades. And consistently, you will see that the percentage of trades that are profitable are much higher than you would get in case you're trading simply based on the RSI without correlating it with support levels or using options in your trades. So I hope this video was useful, and if you liked it, please share it with your family and friends. If you have any comments or suggestions, or if you have any queries, please leave them in the comment section and I will definitely respond to you. Thank you for your time, and I'll catch you guys in the next video.